and dial 505-448-8888. That's 505-448-8888. Or, of course, you can find them at the #1 website for real estate in the state of New Mexico. That's welcomehomeabq.com. That's welcomehomeabq.com for all the stats, the chats, and hey, those late night 3 in the morning. Am I going to get that house? See what's going to hit the board. Tego, Tracy, good morning to you.
You know, I was up late the other night, and it just around midnight, any properties that were in our system that were set to go active that day, they all hit kind of in the middle of the night, and they come flowing in. So, you know, if you're up and you want to see what's coming on the market, you can hit our website right on the homepage at welcomehomeabq.com. We've got a feed of all the new homes coming on the market as they come on the market.
Well, let me change your little roller there at the bottom. I'm like, that doesn't look like Tego's scroll. There it is, 505-448-88. 8888. Tracy, how are you this morning? We haven't heard from you. How are you? A little quiet over there. Very, very mousy in the corner, aren't you? This morning?
Oh, yeah, that's her.
I'm doing great. Thanks for asking. Always happy to be here talking about real estate and seeing you, Eddie.
It's great to see you too as well. And here we are in the middle of 2021 in the sweltering heat of a hot market. And in today's edition of the Venturi Real Estate Team's Real Estate Radio Show, we have key terms in today's real estate market. Why staging still matters, even though they're just getting snapped off the market very quickly. Buyer demand, is it faltering? More good news on mortgage. Delinquencies, by the way, that is, not mortgages, but mortgage delinquencies. Maybe another delay, maybe some more help. And for all that and more, stay tuned for the next 30 minutes right here in the Kiva. We appreciate your attention. I would appreciate it more if you just called my good friends Tego and Tracy. Support the people who support your listening right here on this great radio station. Tego, Tracy, take it away.
Thanks, Eddie. So, Tracy, just keep rolling along in this real estate market, right?
Yep, it's it's July, of course.
It is.
It's
there's been a lot of talk about real estate this week in Albuquerque because there was a series, one of the local realtors talking about what's going on in real estate, and I've had a lot of people messaging me saying, "Is that really true? Is that right? Is that stat that was quoted accurate?" And some of them aren't. Or some of them were speculation, and I'll just kind of leave it at that. So, you know, there's a lot of information out there to absorb about real estate, and so take in everything you can and learn what you can, and you know, try to find the stats and the data to back up what somebody may be telling you.
Which is what you always do, Tego, right? When you see a story that doesn't jive with what we're seeing and feeling in the market, you always go in and look and do real statistics, because a lot of the statistics you pull aren't readily available, but you know how to use the system to pull them out.
Well, it's like that old quote, right? It's like, blank number of statistics are, made up on the spot, right? And sometimes I feel that is true in real estate. Well, it's absolutely true in real estate, because there are so many things that you can track in the residential real estate world that we play in all day, every day, Tracy. And
right. Leading indicators for sure.
Yeah, leading indicators. So one of the narratives I've heard this week, Tracy, is the market is slowing down, right? Air quotes, slowing down.
I've heard that too.
Yeah, and I'm not sure what that means. All I would say is that it's not like slowing down in the sense that it's any different than any other year, maybe is a way to put it.
Right. It's cyclical.
Earlier this summer, it was pretty wild.
It was.
And it's not quite as wild right now, but it's still pretty wild.
Compared to previous years, it's still pretty wild.
Yeah. In the sense of, give an example of what we mean by that.
So we're still seeing it be a seller's market, and 2 weeks ago I had an open house. There was a lot of people in the house, but 6 offers instead of 20 offers. Maybe that's slowing down, but might have been the nature of the house too. You can pick out what you want from it, right?
Yeah.
2 weeks ago we had a couple open houses where there was over 100 people at them. So if that's slowing down, that's scary, isn't it?
Yeah.
But anyway,
Well, and I think one of the reasons this narrative of the real estate market, the residential real estate market, is slowing down is people are picking up on national stories, which that one drives me crazy because real estate's local. Real estate could be even neighborhood specific, down
Right.
to a zip code or neighborhood, and there have been a few stories out there about mortgage applications. There's not as many mortgage applications in the pipeline as there were last year, right? Of course, last year at this time, mortgage applications were at an all-time high by far. And so that's one of those leading indicators of how the market is. And the one thing I wanted to point out is I looked at the data for New Mexico versus, in fact, let me pull it up here, Tracy. And it was looking at how many mortgage applications there were versus the actual compared to previous years. And one of the things they do is they break it down by state. And if you look at nationally, if you're comparing June to June, nationally the number of mortgage applications was down about 10%. But in New Mexico, it was only down about 3 or 4%. I think it's the number. Yeah, 4%. So yes, in other areas it slowed down, and yes, here it slowed down a little bit, but it's half of the slowdown that we've seen in other markets, if that made any sense at all.
I followed you, but
Okay.
yeah. But what we also know is there's a lot of mortgage applications that were not just filled out, that are people still waiting for the right house to come on the market. So even though maybe there was 3% less mortgage applications filled out month over month from last year,
Right.
there's still all those people waiting for the right house from April, May, and June to be on the market, and those applications were filled out before June.
You know what's interesting about this report is they also tracked refinances. Refinances are still very, very strong. In fact, nationally, 61% of the entire mortgage market was refinances still
Wow.
in June of 2021.
Yeah.
So that world is still really, really busy.
And if someone's in a loan and they're planning to stay in their house for a while and interest rates are now 1% or more lower than what you're at, might be a good time to have a conversation and think about refinancing your house.
Well, the general rule, Tracy, it's, if you can save 1% and you think you'll be in your home for at least 2 years,
2 years.
that's very general. You got to do the math on it and work it up, but
Because
that's a very general rule. Yeah.
Refinancing costs money, right?
Right.
You have to repay for the
Yep.
closing costs
Yep.
and things. So if it's going to cost you $2,000 to get a new appraisal and title fees, and you're not going to be in the house,
And you're going to only
for very
save
long.
$50 a month, and you're only going to be there for a certain amount of time. Yeah.
that's how you do the math.
Yeah, the math doesn't work out. Right. So can we
Language. Let's talk about language in real estate. We were talking about this over coffee the other morning, right?
Yep.
Like we typically do, our morning coffee where we talk real estate.
That's welcome to the Venturi household.
Yeah.
Yes.
We probably just shouldn't talk about the things
I
that need to
know,
be done
I know.
around the house. We'll just talk
Yeah.
real estate. But we were talking about all the words that, we weren't using until recently very often. They weren't in our general lingo, right?
Yeah. Well, and one of them is the word equity, Tracy. And that obviously that is a word we've used for a long time and will continue to use in the world of real estate. It's just that equity has exploded in the last year for many homeowners.
We need to say what equity is, right?
Right. So
Equity is the
here's the definition. The value in your home above the total amount of liens against your home.
liens as in what you owe.
Right. What you owe to the bank or whoever you're borrowing.
And you might have a first, a second, a home equity line that you're using. So it's everything that you have value in above what you owe.
It's your equity.
Right.
So it has. I mean, and I know that the study that came out, and I'll just throw the stat in here, is in New Mexico in the last year is about $23,000 the average homeowner gained in equity.
It's a significant number for, your personal wealth growth, for sure.
And just the last thing on equity, it grows two ways. One, it grows by just a price appreciation in the market over time, as well as you paying off your principal every month. You're putting a little bit toward that. So the equity is a big one. Contingency, Tracy, let's talk about that one. That one, again, it's been around, but in the middle of a real estate purchase in the transaction, that's something we deal with all the time, right?
Purchase contracts have a lot of contingencies in them, right? It's not just one. It's not just contingent on selling a house. But there's a lot of contingencies in our New Mexico purchase contract. There's a financing contingency. There's an earnest money. You've got a list. Go ahead.
I've got a list. So there's an appraisal contingency. We're going to talk about appraisal in a second. Assessments and title. So that's different title work, to find out what's going on with the property in ownership, and if there's any assessment against the property, meaning stuff that needs to get paid. There's an insurance review. That's a really big overlooked one, right?
Right. For property insurance, right? Making sure that the house isn't what we would call a lemon, right?
Yeah.
Just like the old days. We don't hear that about cars anymore,
right.
Really. Cars being a lemon, I'm sure it still happens occasionally, but houses can be sort of a lemon. The insurance industry feels like if you've had a couple of claims on a house, there's something wrong with the house, right? So, and that stays with the house even when you sell it.
Yeah, so insurance review is one of the contingencies, and then there's a bunch of other things that the buyer has the option to review about the property, right?
Right. I mean, it can be from septic, well, water, all sorts of different things that it could be.
Right.
Yeah.
If it's a solar system, right? If you've got a solar system, that sounds like, pretty spacey. A solar panel, photovoltaic electrical generation system on the home.
We did have a lot of solar space type things going on in New Mexico
we
this
sure
past
did.
week.
Well, and Texas, yes.
In Texas.
Yeah.
Speaking of space.
And then, I think one of the, just to wrap up this, on contingencies, one of the biggest one is the inspections, the actual inspection of the property, as well as the survey of the property, correct?
Right. Another word that we've used a lot this year that wasn't common is escalation.
Yeah, so what's
escalation
or what we call escalation clause? What does that mean, Tracy?
So an escalation clause is when there's multiple people wanting a home and somebody might say, I'll pay X over up to a certain dollar amount, and they'll escalate their offer based on what the other offers are.
Yep. Yeah, so that's become very common now in if in this competitive market if they're writing offers. So
let's talk about the last one.
Okay.
Virtual showings.
Virtual showings, obviously that
started like last spring, pretty
Well,
much.
we had done that before just with FaceTime and other stuff like that.
We've done a lot of them before COVID.
But now it's become much more common where somebody will want to see the home, but they can't, either they're out of state or whatever reason can't go see the home in person. So the buyer's agent will go to the home and pull it up on their phone.
Or the buyer who's not able to go to the home just looks at the virtual tour online and feels like they toured it. A lot of times there's not even a buyer's agent that goes to the house on their behalf.
Yeah.
Right?
Yeah.
There's a lot of ways to tour them virtually these days. So.
Appraisal, Tracy. Let's just talk about appraisal. Again, appraisal's been around forever. And first off, what and why on an appraisal?
So an appraisal is for the lender, typically. It's not usually done with cash unless, the buyer really wants one. But for loans, it's often required so that the lender can get a baseline and feel like they're making a good loan, that the house is worth what they're going to be lending on it. Now, these days, we've seen appraisal waivers from some lenders. They have some automatic system where they put the property in, the price that's coming, the buyer's qualifications, their credit score. It's not just the house, but the whole package. And they might say, they're putting $200,000 down. We don't need an appraisal for this loan.
Well, that's one of the challenges in our market right now is getting appraisals done. They're just so backlogged. Can be a challenge. So what about waiving an appraisal and an appraisal gap, Tracy? Those are two kind of new terms. Not new, but they're much more commonplace now. So appraisal waiver, what's that?
So appraisal waiver of the contingency. So
Right.
They're saying we probably will still need an appraisal, but even if it comes in that I'm paying more for the house than the appraiser says it's worth, I'm still going to pay the price we agreed upon.
So does the appraiser set the value of the home?
That's a setup question, I know. So the appraiser gets a copy of the contract, which a lot of people don't realize. They're just trying to appraise it for the agreed upon price. But if they don't see other data out there to justify it for the bank, they're going to appraise low. But no, the buyers set the value of home and what people are willing to pay. The appraisal is there to justify the loan amount for the lender.
And so an appraisal gap is that comes in if you have an appraisal come in lower than what the buyer wants to pay or offered, right?
Right. So we might be under contract for $200,000. The appraisal comes in at $190,000. The gap is $10,000. And some of the offers we've been seeing lately, somebody might say, I'll pay $5,000 over appraised value if the appraisal comes in low. So they're kind of limiting how much extra they might be willing to contribute if the appraisal is low.
Got it. Okay. Well, that was our rundown on some of the terms out there. But if you ever want to talk about, some of these terms you hear in real estate and you're not sure what the heck they're talking about, give us a call, 505-448-8888, Venturi Realty Group with Keller Williams Realty. And just on the side note, Tracy, we were talking the other day about some of these terms when you're talking real estate investing in real estate, which is, there's a lot of that going on. A lot of people are understand the value of real estate as an investment. I'm a big believer in that myself, and you are as well. But some of those terms like cap rate, internal rate of return, gross rent multiplier, net present value. There's all these different terms, and when you start getting in that world that are just, again, it's like a whole different world.
I was going to say we could do 10 shows on just that world, right? All the other ways to look at it and all the other terms and the creative ways to finance deals and just lots more about that. Yeah.
Some really good news, Tracy. Let's just transition to this real quick. Black Knight, which is one of the large companies that basically they're a data provider for a lot of mortgage payment services, right? So they have a huge database of information about what's going on with all the mortgages in the country. And Black Knight does a report every month talking about, how many people are in delinquency, how many people are behind on their mortgage. They've been tracking the whole forbearance thing, which is another term that's come into our common language in real estate in the last year is forbearance. But they just put out their July report, which came out in July, just came out the other day, but for June, talking about in what the headline quote was that the national delinquency rate hit its lowest level since the onset of the pandemic and is now back below its pre-Great Recession average.
That's big news.
That is huge news because, Tracy, go back to over a year ago when there were 7 million people nationwide in those forbearance plans, and everybody was, the sky's falling, it's going to be 2008-9 all over again. And guess who was saying, no, it's not?
That would be you.
That would be me.
Yeah.
Anyway.
And you actually gave lots of data to support why.
There was lots of data. It wasn't I was just making it up. It was based on data. Anyway, now we're back to, I have to toot my own horn once in a great while. Come on. I got it right.
And
I predicted it right.
I'm here to pat you on the back.
But now we're down to 1.5 million people is what they call seriously delinquent. Now, that's still a lot of people.
Yeah, at the rate people are coming out of serious delinquencies, by the time the forbearance program ends, they'll be down to about 1 million, which is very low compared to
very low. Especially nationally.
Historically,
that 1 million sounds like a lot, but nationally, it really isn't. And I wish I remembered off the top of my head how many mortgages there are in the country right now, but it's a lot.
Yeah, it's a lot. That's a good stat.
That's a whole bunch.
For a guy who likes stats, that's a really firm stat there.
So I just wanted to say it's really good news on that front. It doesn't look like there's going to be a whole lot of people that are going to be dealing with delinquencies and foreclosures.
The other side of that, Tego, which we've talked about a lot on this show, is those people who might be delinquent, if they do need to sell, they probably still have equity in the home. Right. And they probably can still afford to sell the house, so to speak.
Yeah.
And walk away.
Yeah.
Without having to go through foreclosure.
Can we talk about home staging?
Yes.
How's that for a transition?
I was waiting on it.
So we had Nicole Roram with Sukasa Home Staging in our office last week. Nicole's great. She's been one of the top stagers in Albuquerque.
She said 12 years.
For a long time. And so first off, Tracy, what's staging? When we say staging?
So staging is, part of the process of prepping the home for showings, right? And it can mean a lot of things. It can mean going in and having yourself go in, purge, put half your things away and staging your house. But we're talking about a professional stager, right? We're talking about a seller hiring somebody to do one of many things. A stager can come in and just kind of walk through the house and give you things to do. Change that paint, move that chair out of the room, get rid of that rug, whatever, carpet. And kind of give the seller a bullet point list of things they should do to maximize the sale value of their home, right? And to appeal to most buyers. But some stagers, like Nicole does almost anything. She can add a piece of furniture that you might not have to supplement. She can stage a vacant house. She can stage a backyard, but or give advice on how to do it.
Yes.
Or even, take some of your furniture away and help you get it in storage if you need to, right?
So, okay,
why stage?
Yeah, well, especially in this market where we know it's a extreme seller's market. It's been an extreme seller's market. It's going to continue to be an extreme seller's market, at least for the distant future. So the home's going to sell. Why stage? Why spend that extra, thousands of dollars to stage it?
Right. Well, there's a lot of reasons, right?
Yeah.
So one is you should net more, right? We've seen, and Nicole shared a couple of examples, and I know of a few others too, where the home was on the market, didn't sell, and came off the market. They staged it, put it back on the market, sold with multiple offers. And we don't see a lot of that these days. We saw one where the house was under contract, fell through, got staged in the interim, went back on market, then got multiple offers, 10,000 higher than where they were under contract before when the one fell through. And the staging more than paid for itself, right?
So staging, Tracy, when we talk about, a lot of times when we think of staging, we think of a vacant home and putting furniture in there to make it feel comfortable. It's just like a model home that you would see at a builder's example. And I think in those cases, it's pretty obvious that, somebody touring a vacant home, it's cold, it doesn't feel, there's not a whole lot of energy.
You can't sit and enjoy the room, and
you can't visualize the space. Sometimes you'll go in a room and you go, how do we put furniture in here?
Right.
I don't understand it. So the staging takes away a bunch of those objections.
Right.
For potential buyers, or
really
for buyers that maybe just can't see it, right?
It's really hard. A vacant, an empty room feels small compared to a staged room or a room with furnishings in it. Mm-hmm. It really changes the perception and the feel greatly for people. And a lot of people, I've seen it over and over the years. People can't visualize their things in a house or how to arrange furniture groupings and things. And the stager can really make it to the maximum of how the house could look.
Yeah.
And so, yes, we think of an empty house and having someone bring furniture in, but it's somebody that already has a fully furnished house. A stager can come in and make suggestions. Stager can, sometimes half the family's already moved and you need extra furniture just to finalize what's left, right?
Yeah.
There's just lots of things, or just advice. Help picking things, help choosing colors. I know a stager recently helped a client that bought a house that didn't have any furniture, just help them shop for furniture because they're so good at it.
Yeah, well, they're interior designers is what they are, and they're they're taking that skill and putting it into merchandising the property to sell.
Right.
Yeah. What else did you have on your list, Tracy?
I was thinking about some of the homes we have coming.
Yeah.
And we have quite a few homes that are going to be on the market here in the next week, from $225,000 in Rio Rancho to an amazing house in the far Northeast Heights for $995,000. Fabulous newer construction, just a gorgeous, I think it's somewhere in the 3,000 range. I can't remember, but a variety of homes coming on the market with our team as well as others. It seems like it's going to be a really good time. If you're looking for a house, we can help you. We have solutions, Tego. When we meet with people who want to buy and sell at the same time,
Right.
we can do the whole guaranteed that their house will sell so they can move forward and buy a house not contingent on their house selling. So when your house is in the median range or below for price, we can guarantee we would buy it if it weren't to sell in time for you to close on your new home.
Yeah.
So we would be happy to talk with you about that or any other options that we have. Tego, what's the latest on purchasing power and mortgage rates?
Well, mortgage rates are still really low. We're still hovering in that all-time low range, somewhere in that 3% range for a 30-year fixed mortgage. And I want to just caveat that because it depends on if it's a conventional, NFHA loan, how much down payment, what your credit is. There's a lot that goes into that. But it's in that 3% range. And just to put this in some sort of perspective, right? If you're buying a house today and that home is $300,000, okay, and you're getting that 3% mortgage, and the estimate is that you're going to be paying about $1,265 a month
for the house,
for that mortgage, and that's just calculating with a down payment and stuff, right? You're going to be $1,265 a month.
Can you believe $300,000 you can have a payment?
Right.
Yeah.
Right.
Okay, but if the interest rates go up to like 3 3/4 or 4, what would that same house cost?
Well, this is to put this in perspective. If you were to buy that, if you were trying to keep that same payment of $1,265, now you're going to be closer to a $270,000 house to get the same payment at a 4% mortgage rate. So that interest rate has huge influence on how much you can buy or how much you cannot buy, if you're looking at it from a monthly payment standpoint.
Right.
And so that's why, today, again, in this 3% world that we're living in, we were talking about this last year, Tracy, where we were saying, okay, well, even if home prices go down, if you're locking in at 3%, you're still ahead, even if prices go down in a year.
And the interest
rate go up. And yeah, it's this whole thing. So, and then we had the conversation that came up at our team meeting. It's like, well, they want to wait because whatever.
Buyers want to wait and see what happens in the next 6 months with interest rates and house prices. And we're like, okay.
And that's fine.
That's fine.
Yeah, no, I mean, I think sometimes people think we're just sitting here saying everybody's got to buy a home. Well, I do believe that because I think home ownership is probably it is the number one way for people on the lower economic scales to move up in economic scales is home ownership. Home ownership versus renting is definitely affordable housing.
Right.
Right.
That's the difference for sure.
I don't know where I was going, but I got a little off track there because I'm so passionate about that whole idea, right?
Yeah.
That home ownership is a big deal. And I know what it was, Tracy, is, if you're ready to buy, then,
And if you find the right one, so you can say, I'm going to wait 6 months, but if the right house becomes available and you're able to see it and make an offer and get it, then go for it, right?
Right. And if you're not ready, that's fine too, and if you don't know where you're going to be living a year from now, and maybe Albuquerque isn't where you're going to be, that's fine too.
Of course, it would be a great rental house if you decide you need to leave. But, the whole thing is don't let the fear hold you back. Yeah. I think a lot of us have this fear and we let it tell us ourselves not to make good decisions because it thinks it's protecting us, right?
Yeah, well, it is. And logic, what do they say? Logic is great, but it doesn't motivate us to decisions. But for me, I need to see the numbers. And when you look at the numbers at renting versus owning, the math is clear. Is owning is always a better long-term investment if you plan on being there for a few years.
Right.
Or more. So,
yep, for sure.
Yeah.
So we we can certainly help you. Give us a ring, 448-8888. We're always happy to be here on Saturday morning talking real estate. It's like our morning coffee together where all we do is talk real estate, but we brought you in on it with us. So
That's right.
Wow.
Yeah.
I like that. That's a good image right there. And by the way, they are the best, folks. Tego and Tracy Venturi, the Venturi Real Estate Group from Keller Williams Realty. All you have to do is pick up the phone and dial them direct. 448-8888. That's 448-8888. Or welcomehomeabq.com. That's welcomehomeabq.com. As always, love having them here in the